All right, guys. Welcome back to this review of the past week with the S&P 500 and my daily shorts. I release daily shorts basically every day just before the market opens. And this has been a very interesting week, and I've been struggling a lot. Not with the charts. I've been struggling with the short video format. I only get 15 seconds to talk about the charts, and I don't know. I'm a slow speaker, I guess, because those 15 seconds they passed really fast. So I I had issues to with cramping in all of the info I wanted to and was unable to. So I don't know. I'm gonna basically have to learn to speak faster or something. Um, Anyway, today's video, we're gonna look Monday to Friday this past week, and we're gonna talk a little bit more about next week. And also at the end of the video, I will place all of my shorts in order for you to review them if you want to. But I have split the week, as you can see here, in basically Monday, Tuesday, Wednesday, Thursday, Friday. Anyway, um, let's get into it. This is how the market looked just before the opening Monday, and I was predicting resistance and a level of 35.20, and it's down here as a target. Now, how did I get to? I was talking about the yellow box. Here, I don't have the yellow box. I removed it. But what I was talking about is basically this retracement level. I was expecting that if Monday opens bullish, then we're gonna go somewhere here, and after that, once this retracement is done, the wave will continue downwards. And let's see what happened on Monday. That's how it opened, and instantly. Now this is interesting because as you can see, instantly we jumped right in this level and then we stopped, and then the pressure just continued building. So that is how Monday ended, basically. We zoomed past this retracement level. For me, this means that it is no longer valid. So there's no point in looking at it anymore because we have retraced more than what it is expected. However, we are in the next phase and we have this massive cloud that is going to push down on the price. So as you can see, there's a lot of resistance in this cloud, and thus this is what I was talking about on Tuesday, that if this continues, we're going to have to look for a lot of resistance in this cloud, and I was still bearish. So what happened Tuesday? Let's move on. Boom. Well, this happened, and it just zoomed past this cloud. So that was very interesting. But then again, a slowdown. So there we go. We're going to stop it there. This is what happened on Tuesday. We just zoomed right past the resistance level. Probably, I'm guessing, a lot of stop losses got hit somewhere here, and this is what happened. Now, once we got in this position, this is where I realized that no, I can. The 1 hour chart is no longer valid for me to look at, and this is where I made the decision to switch to the daily chart. My shorts, I do them because I'm trying to do intraday. I usually don't do intraday trading at all. I mean, I do these videos, but I don't take the trades based on the hourly charts. That's not what I do. I do daily, mostly even weekly and monthly, even sometimes. But anyway, I was still convinced that nope, this is not a reversal. We are not in the good times. But let's see. I said on Wednesday that yes, we did gap through the cloud. I will be switching from that moment to daily charts, and that is basically because well, hourly chart is no longer valid, but I'm still bearish. You can see the market is going right against me, but I'm sticking I'm sticking to it. Nope, nope, this is not a bull market. But let's see. Let's switch to daily, and this is how it looks at the daily chart. Now, as you can see, if we have this impulsive movement and we are now starting a corrective movement on the daily chart, all of a sudden this is actually looking normal to us. We are still in the downtrend. We are right there with the retracement levels, just barely touching it. And let's see what happened after that. Now you see where this yellow box is from. It's from the daily chart, the Fibonacci levels for the retracement. So let's zoom back in to hourly. Basically just to see what happened. There we go. As you can see, we touched the levels, and touch and go. That's basic. That's good enough. I mean, when there's a corrective wave, you don't have to go all the way up. It's enough if you touch the first level. It's good if you touch the second level, and it's amazing if you don't break through the third level, because if you do, then you're gonna have to look at this with other glasses, so to speak, because then this retracement is invalid. As of now, it is valid. As you can see, we just touched the first level, and then we're slowly creeping back. Let's continue, see what happens. And it's holding. There we go. It's holding. Now, Thursday, this is how it looked before the Thursday opening, and this is what I was working from. I was working with these levels, and that is why I also said that there's still a little bit room left for some gains, and it is between basically these levels. But we are still in a bearish move, in a bearish wave move. And if we just continue, let's see what happens. And yes, it is still holding. I mean, my God, there you go. That was Thursday. Before Friday opening, that was the situation. As you can see, the hourly, well, this would, if we hadn't declared it the hourly chart invalid, one could say that, oh well, this will be the new support. Well, no, we did declare the hourly chart invalid, and thus we are completely ignoring the Ichimoku cloud down here. We are looking just at the daily, and the daily is still telling us that yes, there is room in the yellow area if you want to go back, but everything is pointing that we will continue down. And that is what was said before the market opening on Friday. So what happened on Friday? Well, there you go. There you go. Boom. And that is basically Friday. And this is the position we are at. Let's switch back to the daily chart. So this was the past week. In the greater scheme and time frame, this is just a little uptick. It's normal. It's right there at the first level, so it is moving just as expected. As you can see, we are below the cloud. Let's just remove all of this clutter. We don't want to see that because we're going to do some new drawings. So where are we going? Let's do the extension. We have this big impulsive move, then we have this corrective move. There we go. Lock it. And for the upcoming week, well, this is the area to look out for. This is our new target. In the beginning of the week, I was talking about 35.20. Where is that? There it is, somewhere up here. Yeah. Now the target has moved even lower basically because of this uptick. So we are looking for, yeah, below 35 at least. So it's going to be very interesting to see how market opens on Monday. I expect this to continue down. Perhaps we will get some sideways action, but if we get the sideways action, well, here is the daily cloud moving in, pushing all of this range down, down, down. So even if we get the sideways action, I still expect this to slowly but surely continue creeping down. Now let's have a little bit of fun and go to weekly charts just to see, well, what is happening on the weekly charts. And this is how it looks. Just gonna remove these. It's still a downtrend. We had impulsive move, corrective move. Let's measure the retracement. Is it, we then bounce slightly above, but not a whole deal. So it's still below. Oh, sorry, I just slapped my microphone. It's still below the cloud though, so this is a valid move. So we had this impulsive move, then we had the corrective move. It did break through the Fibonacci levels, but the cloud worked with us, and now we are starting a new impulsive move. And if we're gonna play a little bit with the weekly, we're already at the level, which means that this could be a slowdown on a bigger picture. Again, this is a weekly chart, so this could be an indication, a first indication of a slowdown for this bear market. Of course, if we zoom out and count this as an impulsive move, then there is a little bit more room. But as you see, we are already in the area of the impulsive move, basically for this one. So this could indicate a slowdown. And if we're gonna have even more fun, we're going to the monthly chart, and now it starts to get really interesting. Do you see? We had this massive impulsive move. Now we have a corrective move, and we are, as you could see, we are getting a slowdown on the weekly chart. We are getting closer to the Ichimoku cloud that will act as a support. And let's not forget the fact that already we are down. The market is down 25%. That is a lot of percent. If we zoom out and see, well, the last time this happened, how much is that? Well, that's a big move. That's about 25%. How about that one? That's a 16%. Then we had, this looks also big, 50%. So just to sum it up, on the lower picture, basically hourly to daily, we are still bearish. This could still go down a little bit more, perhaps even somewhere, I don't know, down here, maybe 34. maybe 33. I don't know. We'll see. This is why we have to follow it week by week. But if we zoom out from the daily charts and start to look at the bigger picture and start thinking in weeks and month, well, this is starting to enter an area where this we could start to see a slow recovery, basically of the S&P 500. I don't know. Can I say that the worst is over? I hope so. It surely does looks like it. So hopefully we will see a slowdown now in a couple of months, and after that perhaps even a recovery. Anyway, guys, this was like a look back on the week in S&P 500. It's been a lot of ups and downs this week. Just not to mention, well, oil. I'm going to make a separate video about that. There will be a link here somewhere, probably. OPEC basically screwed us, the entire world, over. But I will talk about that more in the other video. Other than that, well, I hopefully hear from you again soon. And Monday morning, just before the market opens, well, it's actually almost evening here in Sweden when the S&P 500 opens for trading. But I will release the next short. All right. Cheers. Bye. S&P 500 daily. Yellow box is the resistance level to watch out for today. Otherwise, we're entering the profit area. So next stop is 35.20 to look out for. Cheers. We did get a slowdown at the yellow box yesterday, but broke through. Now we have the Ichimoku cloud that will push down on the price even more. So look out for the cloud today. Cheers. Oh my god, it's bull market gapped right through the cloud. No, it's not. Let's have a look at the daily. There we go. Smack in the middle. Guys, S&P 500, we're gonna have to stick to the daily chart today for this intraday. There's still a little bit of room left for uptrend, but then we do predict a continuation of downtrend. Cheers. Unfortunately, I'm still gonna have to repeat myself from yesterday. We are on the daily chart. There's still some room for a little bit of retracement, and after that we are continually bearish.